The key for successful trading is to have a good strategy. But what's a good strategy? It all depends on win rate versus risk reward and good risk management. This chart is really important to know if your strategy is profitable or not. Here you have the win rate and here it's the risk reward ratio. This is exactly what I mean by risk reward ratio. For example, your entry on Apple is at $135. If your stop loss is at 130 and your target is around 150, the risk reward ratio is 1 to 2.5. If you want 1 to 1 risk reward ratio, your stop loss should be around $120 and the risk reward ratio will be 1 to 1. In other words, if you risk $100, you'll make $100. If you stick by the end of the video, I'm providing a bot for you to do those calculations for risk management. This chart shows even if you have a 30% win rate, you can still be profitable, but you need to have a minimum 1 to 3 risk reward ratio. This is one of my day trading strategies. This strategy have 2 to 1.3 risk reward ratio. So I make less than what I risk. If I risk $200, I would make $130. But I have a 83% win rate. If we go and check the chart, this strategy shows that I have a profitable strategy even though I have less than 1 to 1 risk reward ratio. I made $5,000 almost every day last week using this strategy. So next time someone says you should have a minimum 1 to 1 risk reward ratio to be a profitable trader, you can know he doesn't know what he's talking about. And this is one of my swing trading strategy. This strategy have 1 to 5 risk reward ratio and 80% win rate. If you're going to check the chart, this is where it fits. Now you're going to ask, then is this more profitable than the first strategy? Well, it depends. With the same buying power ratio, this strategy made only 30% and the first one made 231% in 3 months. Why? Because this is a day trading strategy and I just hold the stock for 20 minutes, and because of the volatility I make more percentage in shorter time. But as your account grows, you'll have liquidity problem because these stocks are volatile. Since they are volatile, with big amounts there's much more risk on the account. Meanwhile, the swing trade strategy is much safer since we're trading safe stocks, it's less time consuming, and I hold for 30 days for few percent profit. So now you can decide which strategy is more profitable or not. It totally depends on your buying power. So it doesn't depend where it belongs on the chart, it totally depends on the strategy. And you need to build the strategy totally based on your risk tolerance, how much you like to hold the stocks, and all these factors. But you can still lose money while having a profitable strategy. Let me explain you how. Let's take into consideration a 1 to 1.5 risk reward ratio and 50% win rate. So the first trade you got in with $1,000, you made $150. The second trade with $2,000, you made $300. And the third trade you said, yo, I'm making money, let's get rid of 5k, and you lost $500. So even though you have a profitable strategy, you still lost $50 instead of making $200. So this is the power of risk management. I'm a big fan of risk management, and that's why I have many trading bots in my chat room that does risk management for us. I personally think there's two methods of managing risk. For example, if a strategy like my day trading one, all the stocks that I trade have the same volatility. So if they have the same volatility, I get in with the same amount per trade. But on my swing trades, each stock has a different volatility. That's why I use RiskBot. RiskBot is this channel that I can type in risk, the amount I want to risk in. It means that the maximum amount that I want to lose on the trade. For example, let's say $1,000. My ante on the stock is 30 and my stop loss is at 28. I click enter. The bot will answer me and say get in with 500 shares. So if you get in with 500 shares, the maximum that you lose on that trade is $1,000. So this is a perfect way to manage your risk on the same strategy, but each stock has different volatility, so you're not getting in with the same amount per trade. I'm going to show you an example. If I got in with the same amount on each trade with my swing trading strategy, I would lose big time. QS was one of my swing trades. I got in around this area, which is around $55, $50. And I did set stop loss around $40 and target around $70. Unfortunately, on this trade, when I got in, it did touch stop loss, which is around 20% loss, before doing this bounce back. So I lost 20% on this trade. And on PFE, I bought around this area and sold here. Percentage wise, I only made 3% on Pfizer. But I did make more than I lost on QS. But on QS, I had 20% loss. This is the power of risk management. Why this happened? Because Pfizer, it's not a volatile stock. It's a very stable stock. So with the perfect risk management, with the risk bot that I showed you, I got in Pfizer with much larger amount than in QS, which is a much volatile stock. I got in with a lower amount. That's how I made more on Pfizer than I lost on QS. I hope, guys, you learned something new today. This is key for building a great strategy. So again, thanks for watching and see you in the next video.